welcome to another GEPL market outlook video. I'm Sanket, and let's start with this video for the market outlook. Let me share my screen so that we can move further. Okay. So in this slide, we can see the key updates from this month that have happened over the last few weeks. So the first update will be the India's WPI data, that is the wholesale price index data was released, including as well as the retail inflation data was also released. So WPI was in the month of May eased to 14th month low at 0.39% in the month of May, which was lower than the April month 0.85% and 2.05%, which was in March. On the retail front, so the retail inflation, that is the CPI data, fell down to 2.82% in the month of May, which was a 75-month of low, and this was lower as compared to the April month's 3.2%. And this was the fourth straight month headline inflation has stayed below the central bank's target of 4%. So this was the very positive update in terms of the inflationary data, as basically what happened is the food inflation has been lowered, especially on the vegetable side. However, the fruits inflation remained high on the higher side. So pulses as well as vegetables were prices declined in the month of May. As a result of that, we saw that the retail inflation came at 2.82%. Furthermore, the US Fed had a meeting in the last week, and we saw that they have kept the interest rate for at a constant at 4.25% to 4.5%. So the official, however, the US Fed officials have revised their 2026 outlook and plans to only do a 25 basis point of rate cut in 2026. This is down from the previously projected 50 basis point. So this, I would say, a cautionary outlook by US Fed is due to the Trump's tariff impact, as well as the ongoing Israel and Iran conflict, which may lead to further volatility in the market. So the US Fed is on the cautious side and is expecting a increased inflation in the upcoming months. As a result of that, they have increased the inflation target for the year 2025 to 3.1% compared to 2.8% in the previous forecast, as well as they have lowered their GDP growth for in 2025 to 1.4%. This indicates that the US Fed is expecting a moderation to slowdown of growth in the US markets as a result of that, and inflationary pressure. So together, this should lead to a stagflation in the United States. As a result of that, we are seeing that US Fed has kept their rate cuts constant. Furthermore, as I mentioned, that the ongoing tensions between Israel and Iran, this conflict has been rooted due to the Iran's accelerated nuclear weapons program and the stalled diplomatic efforts with Israel and United States. As a result of that, we are seeing certain tensions between the both countries, and this has led to rise in crude oil prices, which we have seen has almost touched $77. That is Brent crude, hit $77 in the past in the previous day. Furthermore, on the, I would say, a stock specific update would be that Sun TV Network's chairman and MD, that is Mr. Kalanti Maran, has received a legal notice from his brother accusing him of fraudulent practices and misgovernance at the company, and they have demanded that the shareholding as a group should go back to the previous 2003 shareholding pattern. So this conflict has been ongoing over the last few years. However, this is the first time that Mr. Dayanidhi Marana sent a legal notice to his brother. So this escalated conflict has led to a decline in the stock price as well today. Moving further, in this slide, we can see the FPI sectoral inflow and outflow. So this data is for the half of June, that is 2025. So in the past 15 days, what exactly happened is FPIs have been removing their money from FMCG, power, consumer durables, IT, consumer services, telecom as well, which was telecom one, I would say, was one of the key sector which saw high inflows in the past months, However, in June, it is seeing a outflow in the month of June. The key sectors that remain strong in the month of June would be the financial services, chemicals, oil and gas, capital goods, realty. So financial services sector saw an inflow of 4,685 crores in the month of June till now, whereas the FMCG sector saw an outflow of 3,626 crore, and power sector was the second ranked second amongst the outflow at 3,120 crores of outflow in the month of June as of now. So what exactly this indicates? The financial services sector stands out as one of the key beneficiaries in the recent macroeconomic developments. This is due to the RBI's rate cuts, repo rate cuts, as well as the cash reserve ratio cut by 100 basis point. So this rate cuts is leading to a lower borrowing cost, and this should improve the credit availability to consumers. So these measures are expected to stimulate the lending activity and support the business as well as the consumer demand in the Indian markets. Furthermore, RBI is also paying a record dividend to the Indian government, which should further strengthen the infrastructure spending in the upcoming months. This increased public expenditure, but especially in the capital intensive business, I would say capital goods sector especially, should directly benefit and indirectly benefit the banks as well, as they will be able to lend more to these businesses. And this should further improve the infrastructure story of India as a whole. As we saw in 2024, infrastructure capex was lower on the lower side due to the elections as well as increased monsoon season. So, however, in 2025, we expect as we move further, the infrastructure spending should improve. On the other hand, IT and FMCG sectors are facing both sectors are facing headwinds. The IT sector continues to remain subdued due to the global economic uncertainty, especially in the US with tariffs and the current conflict. However, as a result of that, we are seeing a cautious tech spending by enterprises. I would say IT companies are a bit on the cautious side, as they mentioned in the recent earnings call. Furthermore, the FMCG sector is grappling with the increased input cost, especially in due to the rise in crude oil prices. If this prices increases, we should see a lower demand as the product prices increases and the customers may face an increased pressure. As a result of that, we should see a FMCG sector to face continued headwinds in the upcoming quarters, I would say. In such an environment, I would say identifying companies with strong growth trajectories and that are available at reasonable valuations should be a key motive, and this should help us create a wealth in the longer run. So that's the end of the video, and thank you for watching this video, and do share, like and subscribe our GPL Capital channel. So thank you again.